was giving a public speech today. Your colleague, Governor Kugler, gave remarks earlier today in Uruguay about the importance of an independent central bank. No particular reason, I'm sure, that was the topic of the day. We have a lot of students here today. I'm wondering if you could just explain in general why there is this bromide about it's important for the central bank to be politically independent.
Sure, I'd be glad to. Let me say what we mean by independence first. So what that really means is that the decisions that we make about monetary policy, about interest rates, cannot be reversed by any other part of the government except, of course, Congress. Congress created the Federal Reserve by statute and can do what it wishes to do by statute, but our decisions are not reviewable by any other agency. And we are charged to make those decisions with regard to the medium and longer term well-being of the public that we serve. So we're not thinking as we make our decisions about the well-being of any political party or anything like that. So we're just looking at the macroeconomics and doing the very best we can. There's been a lot of research about central bank independence, and what it shows is that central banks who are independent, meaning independent from the other parts of the government, do a better job on inflation. And that makes a lot of sense because, you know, we're thinking really just of getting inflation under control while keeping the labor market strong, and we're not thinking of political factors, which would frankly be a distraction to the already difficult work that we have to do the main job. So the academic research is very clear globally, by the way. This has been a global trend for more than the past 50 years. Advanced economies like the United States economy around the world all have central bank independence of one part or another, in one form or another. The other thing I'll add is that what comes with that, on our part, is an obligation to be highly transparent about what we do, to explain ourselves to the public, to Congress. Congress has oversight over the Federal Reserve in our system. So we spend a great deal of time talking to the oversight committees and the broader Congress in the House and the Senate, explaining to them why we're doing what we're doing. I testify as a matter of statute 2 times of the year in each of the House and Senate. So that kind of gives us the accountability that we need to be democratically legitimate in a situation where we do have some independence.
The macroeconomic conditions that you just described in your remarks sound tantalizingly close to a soft landing. I know you're not willing to declare victory yet. To what extent do you think the fact that the Federal Reserve is credibly independent is responsible for the good outcomes that we've had so far?
So the credibility is really everything in our work. And I think, as you know, inflation spiked really globally, all around the world, as the economies around the world reopened after the pandemic shut down, and on the back of a lot of fiscal and monetary stimulus. We saw a burst of inflation all around the world. And what happened is we raised interest rates to bring that down, but the public had faith. We measure inflation expectations many different ways, surveys and based on market-based instruments, and they all kind of showed the same thing, which is the public all through all this believed that we would get inflation down, that we would restore price stability, which we define as 2% inflation. And that's ultimately the key to it. Inflation is a social phenomenon. If people believe that inflation will be higher, then it probably will be. And if they believe that inflation will come down, then people who make and take prices and wages, they will make sure that it does come down. So it's absolutely critical that we be credible. And part of that is that we responded so forcefully when it became clear that inflation needed a response from us. We responded quite forcefully, and we think that helped keep inflation expectations anchored, as we say.
And then one last question, and then we can move on, I promise, on this. There have been times in U.S. history when people look back and say that the Fed was not seen as terribly independent. What did we learn from those episodes, in your view?
Well, if you go back to the period of the high inflation, which I'm old enough to remember, it was during my college years, and basically the public kind of lost faith that the Fed would restore price stability, and the cost was a decade of very high and very volatile inflation quite difficult. Business conditions, extremely difficult for people on a fixed income. Think what that does. You may have felt it. If you're on a fixed income and prices go up 20%, you're just in trouble right away. So inflation is worst for people at the lower end of the income spectrum and the wealth spectrum. So we've seen it here in the United States in the 1970s, actually, and it's not a pretty picture. So, you know, I think this is very widely, by the way, understood and supported. You know, I've spent a lot of time on Capitol Hill, and I think where it really matters on both sides of Capitol Hill, the Senate and the House, in both political parties, there's a broad understanding that an independent central bank is very important in just serving the public as best we can. We're not perfect. Everyone makes mistakes, but you'll get the best results if you have people who are just focused on that task and separate from politics.
Thanks. A little bit more elaboration from what we heard last week at the press conference on this question. In that press conference, you basically downplayed the impact of the election on FOMC policy. You said we needed to kind of wait and see, but that does stand in contrast to how the FOMC behaved at the December 2016 meeting, when roughly half of committee participants, according to the transcripts, upgraded their economic forecasts based on expected changes to fiscal policy under a Trump administration, and in particular a previous trifecta in which the Republicans controlled both chambers of Congress and the White House. You were, in fact, one of the policymakers who made changes to your forecast, finding that the staff's assumptions around a tax cut was a reasonable placeholder, which gave you greater confidence in the outlook. Does that approach seem reasonable in the current circumstances? That basically, you know, since the FOMC has been starting to judge some downside risks to the growth outlook, does the election and the results that we have today remove or at least substantially mitigate downside risks to growth?
So that's your question? So I think it's too early to reach judgments here, and I'll tell you why. So the job of staff is to go, you know, and be very nimble and make assessments in real time, much like capital markets do. You know, the markets are pricing in assessments of what policy changes will be made and what their effect on the economy will be. And staff will do all of that. I think policymakers are going to wait longer to see what the actual effects will be. And so, for sure, at our December meeting, staff will present what we know, but the thing is, we don't actually really know what policies will be put in place. We know that policies in several areas will change. We don't know how much, we don't know over what time frame. When it comes to fiscal policy, it takes quite a long time to get a bill through Congress, and I think this year what we're looking at is something that doesn't need to get done until the end of the year, and therefore probably won't have any economic effects this year, but it'll be more 25, it'll be 26 or 27. So I think we have time to make assessments about what the net effects of policy changes will be on the economy before we react with policy. That's not to say we won't be doing quite a lot of analysis. And the analysis we do, by the way, is informed by the best research, the best thinking, the best experts, and there's a lot of research on the effect of policy changes on the economy. We'll make those assessments, but I think we'll be careful about changing policy until we have a lot more certainty.
You've spoken before about federal debt as being at